thank God that we have another opportunity to explore the world of business. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations. That's what we do here on Business Morning. I'm Mini John McQuarrie. I'll be taking you through the journey of the world of business, starting from the global space where crude oil prices, that's for WTI, fell 4% on Friday after President Donald Trump threatened China with higher tariffs in retaliation for Beijing imposing stricter export controls on rare earth minerals. So we see that U.S. crude oil rose 1.6% to close at $59.84 a barrel. Global benchmark Brent, that one is up 1.56 to settle also at about $63.71. An unusual scenario where we see the WTI more expensive than Brent. You know, global markets mostly prefer Brent. WTI is from the United States, but that pronouncement by President Donald Trump reversed the trend, and we see that China-U.S. trade relations were thought to be improving slowly. At least that's what we thought, not hearing so much talks about the tariffs. But this latest setback once again raised concerns of higher tariffs that may slow global economy and hurt demand for oil. Incidentally, World Bank just announced how the world things are not as bad as they thought it to be because of price stability amidst all of the trade tariffs. But I wonder if this will reverse that. Oil prices have also been under pressure as OPEC Plus has been increasing supply to the market for months. And this also is adding to the movement in oil prices. Here in Nigeria, the Liquefied Petroleum Gas Retailers Association of Nigeria, they've distanced members from the recent surge in the price and scarcity of cooking gas across the country, insisting that retailers are not responsible for the current hardship facing consumers. Chairman of the association under the Nigeria Union of Petroleum and Natural Gas Workers, NPENG, Mr. Ayobami Olarinoye, stated this in a statement, and it says that the ongoing hike in the price of cooking gas is a result of supply challenges, market instability, and not price manipulation by retailers. Casting our minds back, we remember that this started after the strike of Pengason in their troubles with Dangote. The Debt Management Office has released latest numbers of Nigeria's debt status, and it shows that total public debt has hit 152.39 trillion naira as of June 2025, the highest ever on record in naira terms. This is according to latest data from the Debt Management Office. We'll also say that the public debts in dollar terms also rose 99.68 billion. That's just 400 million shy of $100 billion. And this is consistent with upward trajectory in Nigeria's debt stock. It reflects both fresh borrowings and the impact of appreciating exchange rate, especially on external debt obligations. Let's study the numbers for just a bit. So we see total debt at 152.39%. Obviously, that's 100%. The highest is in Eurobonds. In Eurobonds, we see 26.48 trillion naira. That's 19.4%. And then for FGN securities, you know, all the treasury bond and the federal government and the NTB, the federal government bonds and all of that make up the FG securities. And we know that the federal government was really, really active in the fixed income market, especially at the beginning of this year. So that is 80.55 trillion, making up 17.4%. World Bank comes next after FGN securities, even though the report we'll be discussing also later on today of World Bank on Nigeria, their observations, a part of it not agreeable with the federal government, but we still borrow a whole lot from the World Bank. So we see at a 29.65 trillion, that's 5.5%. Nigeria is also owing China. China is being owed 8.46 trillion naira. That's about 3.8% of total debt. AFDB, the African Development Bank Group, is being owed 5.82%. and that's 0.7%. And we know that last week, President Tinubu has sent requests to the lawmakers requesting for fresh borrowings. And I think even EFDB is supposed to give Nigeria some other finances this year. So we'll see what that amounts to and what it does to our status. And then we see how the market fared last week. That's the stock market, and it was a positive week for the stock market and for investors also. Last week, we went from 144 at the beginning of the week and closed at 146,000 level. The market gained 0.33%. Equities cap 92.7 trillion at the close of trade. Let's see how the sectors fared at the close. So that's the activity, mostly red. At the close of trade, their deals of about 24,000 is what we have. And sectors performance, we had mixed colors. Banking closed in the negative. Consumer goods was highly positive, almost 1%. Industrial goods, however, was very, very positive, 4.23%. in the green at the close of trade. Insurance is back, catching the attention of investors, even though it had relaxed for a bit. And then oil and gas was also positive, almost 3% at the close of trade last week. Let's do more of the corporates now. VFD Group PLC, they've announced the launch of a 50.7 billion naira rights issue to strengthen its capital base and fast-track its strategic growth agenda across the African continent and beyond. The announcement was made during a formal signing ceremony by the management of the company in Lagos. And speaking at the event, the chairman of VFD Group, Olatunde Busari, SAN, recognized the support of shareholders, saying that the groundbreaking feat is targeted at expanding the company's operations.
As the VFD Group and partners signed the papers signaling the endorsement of an agreement to launch a 50.7 billion naira rights issue, the creation of a capital base designed to propel its long-term growth projection. Present are the group's chairman, Mr. Olatunde Busari, SAN, the group managing director and CEO, Nanso Opala, and others. The company says this announcement signifies a fresh chapter for VFD Group, strengthening its commitment to growth and value creation for its stakeholders. The board approved the rights issue comprising 5,067,396,400 ordinary shares of 50 kobo each, offered at 10 naira per share on the basis of 2 new shares for every 3 existing shares held. The chairman explains why the company embarked on this historic financial drive anchored on shareholders' confidence.
The intention is to encourage our existing shareholders to have more participation, to invest more in the company, and the fact that the board and the shareholders approved this rights issue demonstrates the confidence that the shareholders have in the company.
VFD Group says its new asset base has now exceeded 356 billion naira, which is expected to improve and capture emerging opportunities across multiple sectors.
The opportunities are abound. We think that we'll be able to raise the amount that is required to take advantage of the economic opportunities that we currently see in the country.
With this bold capital base, the group is poised to take advantage of opportunities beyond the shores of Nigeria and create value.
We are an investment company. We identify opportunities, participate as commendably as possible, and create value for our shareholders.
The group managing director and CEO is confident that the projected capital will be raised and pointed out that VFD Group will remain in the forefront of Nigeria's investment drive.
The economy is moved traditionally by investors, and the more corporates you have in the investment space, marshalling capital in sustainable forms and pushing strategy and reforms that gets those companies to perform and outbid even their competitors in the foreign space, then the economy will move forward. So the key thing is that Nigeria needs investment companies like VFD, and we are at the forefront to capacitize and take advantage of the situation.
The successful signing of the document signals robust assurance from shareholders in VFD's future, vision, and strategy. And the capital will be crucial in achieving the goal of becoming a leading pan-African investment conglomerate.
All right, now let's talk insurance this morning. We've seen a lot of efforts by the NIIA, I believe the Insurers Association of Nigeria, yet Nigeria's insurance penetration rate has been described as critically low, hovering around 0.34% of the gross domestic product. That's at 2023. We do not have a more recent number. It's one of the lowest in Africa, far below the continental average. The gross premium written, the industry has been seen as growing strong, especially since this announcement, of compelling, especially third-party insurance. We've seen a lot of people, forced to adopt it. So the GPW for full year 2024 hit 1.56 trillion. That's over $1 billion and indicates a 56% jump from what it was in 2023. The first quarter of this year saw a record 769.2 billion in GPW, an increase of 63.4 year on year. Dominant segments, mostly non-life segments. Obviously, the third party that's contributed 64% of total premium pool. Within this, oil and gas portfolio is the largest contributor, followed by the fire and motor insurance. Total assets in the sector reached 4.2 trillion in the first quarter of 2025, showing an increase from the previous year. And then there are key statistics and growth rates of the penetration and all of that. But let's find out if those playing in this sector are happy with what these numbers tell us or the implications of it. And we have with us here the Managing Director of Scrella Technologies, Mr. Gbenga Adigun. Mr. Adigun, good morning and welcome to the program.
Thank you. Thanks for having me.
So we've seen in recent times that the penetration is still low.
Yes.
But we've seen GPW increase, more adoption, also especially with the threat that people are putting over on our heads. Yeah. Are you happy with the status of adoption and activities in the insurance sector?
Fantastic question. The answer is definitely no. Have we grown? The answer is yes, a bit, but can we do better? The answer is a very big resounding yes. The insurance penetration on the continent as a whole is about 0.5%. It's about 1%. In Nigeria, it's about 0.5%. No, sorry, I take that again. On the continent, it's about 3%. Now, if we remove South Africa from that, it drops abysmally low to below 1. So gross written premium is calculated as the total premiums collected across all different types of insurance, oil and gas, marine, aviation, life, non-life, the rest of it over our GDP. So that means insurance contributions to GDP is very low at 0.5. Now, what can we do to make it better? There's so much we can do. But the same things that has been bedeviling the industry for a long time, those fundamental issues are still there. And that's what the new NERA Act of 2025 is trying to address. So issues like, for example, in consumer apathy, consumer education, people don't know what insurance is. And when they even know, sometimes they don't trust it. And when they even hear about it, they don't have access to these services. And that's why companies like us are coming in to try and use technology to distribute efficiently, to innovate around distribution where people can have access to it via their mobile phones, via any digital channel, and also trust that when they have a claim or an issue, they are going to be attended to.
But even that, this is not expecting too much. I mean, even for fintechs and all, a lot of people are skeptical. They say, oh, if anything happens, I don't have an office.
Yes.
You know, that kind of sentiment. We have it a lot in Nigeria. So now you're talking of technology with insurance that people never really trusted. And I've told a lot of insurance players that please, you guys should make a lot of noise about the premium that you pay.
Yes.
Then perhaps that could win the trust of more people, because people just believe I do it because I'm compelled to. For instance, to have a third-party insurance, but if I want to access it, then it becomes a long story. So perhaps you guys should make more noise about that. But talking about using technology now, doesn't that need another level of convincing of the customers?
Fantastic question. So the economy we are playing it is not exactly a trust field. I say that with all carefulness and responsibility. the insured, which is consumers like you and I, don't trust the insurer, the insurance companies. The insurance company also don't trust this side enough.
Oh, tell me about that part. I don't know about that part. I honestly don't.
So there's a lot of fraud in the insurance industry worldwide, because you are paying a little money, which is called a premium, for a promised larger benefit if a defined risk crystallizes. So because of that, everybody wants that benefit, even when they've probably not done what they're supposed to do. It's a contract. So there's a big trust deficit, which is also born out of education. It is not in our culture in this side of the world to naturally look to insurance as a financial safety net, as a financial mechanism that protects your asset, that can help you even literally create wealth. Because they say in this side of the world that you are just one illness away from poverty. Somebody in the family falls ill and the entire life savings of 10, 20 years is wiped out. Insurance could have provided that. Is a trading, is an exchange of uncertainty with certainty. So it brings stability, both in from the family to the business to even parastatals to government, everybody. So it should be a part of our financial lifestyle. So that trust deficit that is there, what we're trying to do with technology is to let people know that if you come into this financial safety net risk management mechanism, you are trading the unknown, which is I can have an accident, I can fall ill, I can die, my property can catch on fire, anything can happen. I'm trading that unknown huge loss with a non-defined, investment.
It seems to be forgetting that for a lot of Nigerians, God is insurance.
Exactly. I was going to say that because that is why the industry has not grown. People are like, God forbid, we are literally competing against God forbid.
You can't even tell someone to write their will, their estate.
Thank you very much.
You're wishing me evil.
You're wishing me dead. But this is where life insurance comes in, because I could just leave the studio now and be driving off and the trailer runs over me, I'm gone. And if I'm the breadwinner of my family, immediately the chance of my children having a better life is already challenged. And that is an unknown that can crystallize at any time. But if I had life insurance, even if I die, I can have annuities like an alternative to pensions. My, what's it called? Keep getting payout. I can have a planned, defined way of say, okay, this is how you should take care of my children, pay their school fees, pay for health, pay for that. So insurance, in many ways, really, 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 really helps the economy, and it keeps businesses stable. You've heard of markets where there are fires, and somebody who told you he had a balance sheet of maybe 500 million, there was fire in the market, that amazing trader doing many things, employing people, all of a sudden his business is gone. All the people he's employed, they go home too, they don't have anything to do. So it's something that everybody needs, from individuals to families to businesses to corporations. It is important. It should be part of our financial lifestyle.
And you feel that technology should be able to get more people to get on board it. How? Because we're still struggling with big bodies like, for instance, the stock market. Mm-hmm. We are preaching the message of technology so that it will be easier, especially for the younger people and people who are young at minds, to get on board and trade and sell whenever. And we're still doing T+3 when it comes to the stock market. So if we have the big stock markets not able to efficiently attract more investors and stockbrokers through technology, I wonder what insurance can do. Is it an app or?
Yeah, so for example, what Skrilla set out to do is to provide insurance for portable electronic devices. There are over 200 million devices in Nigeria alone, across phones, tablets, computers, laptops. And all these people, my first rodeo at business before Skrilla Technologies was staff come to me and they say, my phone is broken, can I get a salary advance? Can you please help me with money to fix my phone? And it is happening like 2-3 staff every month. I'm like, this is a real problem. Some people's life just come to a pause. No matter how rich or poor you are, if your phone falls down and breaks, even if you can buy 20, immediately your mood will change for that day. First, you're like, oh, I have so much information on this phone, I can't afford to lose it. So what we've done, for example, is you download an app which runs a remote health check on your phone. If you pass the test, you pay the premium, you get your policy certificate. Smart distribution models like this makes it important for people to adopt technology, because they don't have to come to us physically in the office. We don't have to go to them. The app is the touch points where they just talk to, the app does all that checking. And there is information there, and it is easy, it is convenient, it is do it yourself in less than 1 or 2 minutes.
So assuming that I lose my phone or my phone gets bad and I have this app and all, then how long? Because these are the issues, you understand?
Yes.
How long before I can replace my phone? What do I have to do? Do I have to go to police station? Those kind of
fantastic question. In fact, fantastic question. The not so huge success that the industry has faced is due to the claims experience. That claims experience also widens the trust gap that people have in insurance businesses. And that's why when we set out, we ensure that we came up to give a service promise of just 1 hour. From when you make a complaint, your phone is fixed. In just 1 hour.
In an hour?
Yes.
Should I spoil my phone so I can test it? Because that sounds too good to be true in Nigeria,
No, so these are the things that if you do, over time, one customer after the other, one satisfied customer after another satisfied customer after another, they will begin to become your disciple and tell people about the wonderful.
And you guys should pay for airtime and talk about it on our show.
We'll come back and do that. But today we are talking about the industry as a whole, not just even Skrill like that. Everything you own, from your car to your house to your devices to your business. If you are moving goods from one place to the other, goods in transit, insurance should be part of your lifestyle. It's a safety net. It's a risk management tool that everybody should inculcate in their financial life. It should not be something that is optional. So because there are many things that can go wrong that you do not know that's outside your control. So
there's also another part that causes, builds this distrust, which is, I think they call it the small print or the fine print. Yes. So somebody says, I have insured my house.
Yes.
And then when there's an incident, then you are now reminded that, you only insured it against fire, or you insured it against flood, you did not insure it against robbery, things like that. I think those are other issues that build this distrust between the two parties involved.
You're very correct. But if you go by the definition of insurance again, the promise is a promise of protection against a defined loss. That loss must be defined. For example, if it's auto, theft, loss, fire, it must be defined. What might be outside that definition is civil unrest. If I drive into a riot and they destroy my car, I'm just giving an example, that may not be there. So it's very important that you deal with parties who are clearly defining what is covered. It is very important. So, but a lot of people just say, okay, they just signed a contract, they're not checking those things. So insurance companies now know better. Trust me, they may have done a lot of fine print, things in the past, but they now know better that to drive adoption and improve and create and let more people come into this safety net, we need to better tell them very clearly, unambiguously, that this is what is covered. It must be defined. So that is what insurance is. And you're paying a little to get a lot more later if a defined risk crystallizes. So it's something that protects, and it's something that everybody should adopt and endorse. It is not optional. We should not wait for the government to make insurance compulsory with your car, with your house, with your this. No. On your own, see it as a necessary and financial protection mechanism.
Then COVID taught us a lot of lessons.
Yes.
A lot of things happened. I know some people invested in agriculture. I've forgotten what they call it then, where you're not a farmer, but you...
Crowdfunding,
exactly. Yeah. And when all of that happened, people couldn't access their farms, things went really bad. People who thought they had insurance were disappointed. So I wonder if from a stakeholder, a player's perspective, there's been changes to accommodate things like those, unforeseen COVID kind of situation.
So again, that COVID brought about a lot of changes to how industries did business, because a lot of things were unprecedented at that time. So even the multiple lines of contracts that you sign, some things were still not covered. COVID revealed a lot of things. But again, it comes to the matter of trust. This is where I thought, they are very correct, there are real life examples of that back in 2020. But I thought some insurance players should have overlooked some of those things that were not exactly covered, because this is something that affected everybody, and should have just called the partner, the insured, to have a sit down and say, let's have a compromise. This is not exactly this, but this is also not your fault. So let's have a middle ground. We've seen a lot of revolution in the space. However, if a space has been at 0.5% penetration for the past 5 decades or so, it means you cannot continue to do things the way you've been doing them for the past 50 years. Otherwise, you should not expect a different result. So if you want to drive adoption today, you have to be your customer's friend. You have to be proactive. You have to clearly spell out to them what the insurance contract they are going into nicely covers. It has to be clear, no ambiguity. And you keep reminding them. I also look for ways to reward them, especially if they've been good customers. You have a customer who has been paying premium for his car for 3 years, back to back. He's not had an accident. He's driving properly. You have to go above and beyond to keep such people, because it's very easy for them to just think out of it and say, I'm a careful driver. I didn't have any accident. I didn't make any claim. I'm just contributing to the pool to other people who are making claims. People like that should be quickly recognized. And that is where technology and data comes in. You use all that technology and data to see how you can incentivize such ones, to see how you can give them discounts on the next premium, to see how you can do something for them. So
I really wish there would be a lot of attention given to that, because I think that's a common scenario. Someone has been contributing to the pool for years and has not made any claims. I mean, I would not purposely hit my car, because I want to make claims. Perhaps the insurance sector or its industry should look at a way of compensating. That could also be an incentive for people to not just participate, to even be more careful, because it even costs the insurance less to compensate than to replace.
Fantastic. So exactly. And I dare say today, we thank God for technology. Nigeria is one of the hotbeds of technology, from fintech to any space, whether I like it or not, edtech, health tech, the rest of it. I'm very happy with what we are seeing. The industry is really, really revolutionizing. People are coming up with bright and beautiful ideas. And that's where the insurtechs come in. They are nimble, they can move faster, they can deploy technology, they can use technology to scale, to distribute, and a collaboration with the traditional insurance players who don't move as fast because of obvious reasons. They are big. When you are that big, it's not easy to be that nimble. So we are seeing more collaborative efforts, co-creation of products, and collaborative efforts to help drive adoption, to help delight the customer. Because the success of any insurance business, no matter how big or small, is in the claims experience. What happens when I call you and tell you I've had an accident? Do you delay me for 2 weeks? Because that car might be what I'm using to move around, to even literally feed myself. What if it's an Uber or something? So we must continue to ensure that we delight, the consumers, people who are buying these contracts, these insurance covers, to make sure that they are really, really happy. They see it as this thing, I cannot live without it. So, and it will help them to begin to think less of, it's not my portion, God forbid, it will not happen to me.
Blood of
Jesus. Which are the cultural nuances that we have been facing in the industry.
All right, thank you so much, Managing Director of Trailer Technologies, Mr. Benga Adigun. Thank you.
Thanks for having me.
All right, now let's take a break. When we come back, the World Bank's Nigeria Development Update. That has a lot of goods and not so goods. We'll talk about it after the break. Please stay with us. Hey, welcome back. You're still watching Business Morning right here on Channels Television. Well, it's been months since the federal government banned the export of shea nuts. And that was supposed to make more raw materials available to domestic manufacturers. But there are stories that it also has the other side. However, Ladi Williams took a trip to some factories to find out how this is going, what impact it's having on especially domestic manufacturers in the value chain of shea nuts.
On the 27th of August 2025, the federal government announced a temporary 6-month ban on the export of shea nuts.
This is a collective decision involving the subnationals and the government at the center.
Few months into the temporary 6-month ban on export of raw shea nuts, warehouses of processors across Shagamu and Kano look full. These nuts sourced from top shea nut producing states like Niger State, one of the largest producers, often referred to as the shea belt capital of Nigeria. Also top on the list is Kwara, Kogi, and Oyo State. For processors in Shagamu, the temporary ban on shea nut export is a welcome change.
So for us, I think basically the price on the product itself. And again, the availability for us to keep our plants running. Because, you've invested so much in this plant and the investment wasn't for you to shut down or not to produce because the raw material is not available. It's for you to be able to produce all year round. So availability is key to survival, and it is important for the growth of the economy as well. Because if you have to also look at it from the human angle side, where on this site alone, footfall per day is close to 1,100. 1,100 direct and indirect associates in terms of staff and outsourced and third party. So imagine if we don't have it, then what happens to that 1,100? We'll have some, say 4 or 5 people dependent on them.
So this is the star commodity right now in the spotlight. These are shea nuts, and so many byproducts, come out from this nut that cuts across different industries, from pharmaceuticals, cosmetics, confectionaries. Goes a long way, and the value chain is also huge. From what I've learned.
Up north in Kano, processors echo the same relief. With better access to nuts, production lines are busier and more local jobs are created.
It is quite unfortunate that a lot of Nigerians don't know how much of a gold they have in their pockets, so to say, because for one, shea is a naturally existing product, agricultural product, and interestingly, Nigeria constitutes about 40 to 45% of the world shea in terms of quantity and capacity to grow. So it means that Nigeria is more or less the hub for shea in the world. Now, shea in the world of food and cosmetics is taking over many other butter that you may think is of value, considering its availability, its cost, and it's easy to maneuver for a lot of other products.
For now, this policy has redrawn the map of Nigeria's shea industry, one where value creation at home may finally take center stage. Laddie Williams, reporting for Channels Television News.
All right, now let's take a look at that World Bank's Nigeria Development Update that has both good and bads, and we've seen different reaction from the federal government on it. That report, the flagship report series it's released twice a year by the World Bank. The October 2025 edition was titled From Policy to People, Bringing the Reform Gains Home, focusing on the need for urgent action to bring down inflation and expand social protection for the vulnerable households. So the report captured that there's been positive economic growth in the country. We saw the GDP expanding to about 4%, and that's from 3.5%. They said kudos to performance in services and non-oil industries. They also recorded improving external balances. The foreign reserve exceeded 42 billion and still growing at this time. And then also, they also applaud the declining public debts. The debt's projected to decline for the first time in over a decade from 42.9 to 39.8 of the GDP. But they ask for cautious projection when being optimistic about the nation's economy. And they also, among other things, talked about the need to deal urgently with sustained high food inflation and high poverty. And of course, that was where the federal government came in when they said that the number of the poor in Nigeria has increased to 139 million. And then the federal government obviously disagrees with that part, but agrees with the other parts. I mean, I don't understand how you take one part of a report and then you disagree with other part. But let me see what Mr. Shoaib Idris thinks about this. Managing Director and Chief Executive Officer of Timeline Consult Limited. Mr. Idris, good morning. The last time we spoke to you, you were in Kaduna. Good to have you in Lagos in the studio. You're welcome.
Good morning, and thanks for having me in. Yes, I was in Kaduna at that time, and I'm now back to my base.
Back to your base.
Yes,
you're welcome.
Yes, thank
so,
you.
I mean, this is a report that gives a lot of applause to the federal government, applause its bold reforms, and some of the benefits we have seen. We've seen inflation drop and, all of that, the reserves up. And they mentioned all of that, but when it comes to the number of people living under the poverty line, the federal government will not take that one. But, first of all, what do you think of this report as a whole?
Well, I think for the first time, in more than, let's say, 2-3 years now, we are getting the NDU reports to be a bit, let's say 75-80% positive as it relates to Nigeria. And we will say kudos to the current economic managers of Nigeria. Indeed, generally, there is an economist by name Noam Chomsky who stated that there are no failed states, there are poor management of resources in a nation. So successive government in the past have been mismanaging our resources. So we will say President Bola Ahmed Tinubu and his economic management team are coming up with some laudable policy initiative, and they are taking some courageous steps to implement certain policies that successive governments in Nigeria did lack the courage, the strength, and the wisdom to implement such policies. We don't need to reel them, they are known and we are feeling them. World Bank coming in with this report, we thank them for being forthright and straight. But then we would have thought that in addition to looking at the positive side of the reforms and the result we are seeing as indicating in the high foreign reserve or increase in foreign reserves, near, reduction in our debts, and other positives that they have mentioned. Yes, there are challenges with the poor. The cost of living is still extremely high. We do know that economic policies is akin to planting a mango tree or a guava tree or an orange tree. You don't plant it today and reap the fruits tomorrow, not even after 1 month, not even after 6 months. So yes, there could be some consequences, negative consequences of some of these policies as enunciated in the report, with the claims that, not even the claim, with the fact that more and more Nigerians are falling below the poverty line. So it should have been much fair to, I don't want to use the word colorate, but for want of a better word, let me borrow it, to colorate that, negative aspect of the consequences of the reforms, to say, yes, you did well. However, yes, there is also this negative, but we can understand why this negative. Maybe in the next 6 months, maybe in the next 6 months or 1 year or 12 months, this poverty-driven or poverty-stricken people could come down. Nigerians could get then accustomed to the pains of the reforms. So we could expect that. Mark you, the other issue that they should have, the World Bank should have addressed is, yes, President Bola Ahmed Tinubu, you are bold in X and Y and Z areas, but in A, B, C, D, you have failed to be bold. For example, you have not been able to reign, supreme and courageous to reduce the cost of governance. If Bola Ahmed Tinubu were able to reduce the cost of governance, even if it is by just 25%, believe you me sincerely, we would have seen much, much more than this level of economic progress that we are seeing. We still have bloated bureaucracy. We still have numerous, agencies that, successive government have had series of reports, including white paper, that we need to shrink the cost cost of government. We need to reduce the size of governance. But Bola Ahmed Tinubu appears to lack the courage to hit the nail on the head as far as that is concerned. But where the commoners are concerned, taxation, devaluation, this and that, he has the courage to do much of that.
Well, they also have that as one of their suggestions. They said improving public spending efficiency. And that's their suggestion, because obviously Nigeria is an independent country. Nobody can run our affairs for us. And I think one of the reasons why they would not hide the numbers or spare the numbers of the people living under poverty is both the World Bank and the IMF had emphasized before now that those reforms are bold, they are good, but you need to create social welfare programs before you start off. But we know that, the social welfare program is even still being created at this time. And I guess that is why we have the consequences spill over to the very poor. But the thing that we should be discussing now, so the World Bank, apart from improving public spending efficiency, they talk about Nigeria lacks weak job creation. And we know this lies mostly with the private sector.
Thank you.
Now, if it lies with the private sector, and we have bureaucracy still on, we have ease of doing business still being hampered, and all of that, I wonder how we can deal with this weak job creation.
Capital, like we say, is a citizen of any country. It goes where it is most welcome. Here you are. You have Nigerian entrepreneurs coming in to start businesses, and what do they get? There are fewer roads, electricity supply is still in short, water insecurity and what have you. As if that is not enough. Let me tangentially touch on one of the burning issues today in the country, the relationship between Dangote Refinery and Nufeng and Pengassan. You have an entrepreneur who is bold enough to put in $20 billion of his hard-earned money, and yet, instead of looking at this project as a national interest, Labour is fighting that individual. Now, INI and Nigerians, let's look at this issue pragmatically. If a Nigerian could get this kind of an attack, how much more of a British or a Chinese or an Indian, entrepreneur that will come to us? So as long as we want job creation, we have to do what? We have to give an enabling environment for investors to come in and tap into the wealth of this country. We have enormous amount of agricultural land that we can get investors to invest. We have enormous amount of mineral resources that we can get investors to come in and mine. We have enormous amount of processing and other sectors of the economy that really we should be able to attract foreign direct investment, not as portfolio investors, but as in active manufacturing concerns. And the moment we get that, then we will be able to create employment opportunity. We could be able to create jobs. The 20-30 million youths that we are having on the street of Nigeria not being able to get jobs, they could then get job. But if we don't tame these issues, we will not have, the needed job opportunities that our teeming youth could latch onto.
So, do you see the government on the path of intentionally dealing with these issues? Because, the pushback when they had the poverty number was really hard, no, we don't have more poor and everything. And people say, if you do not accept, then how do you now work towards it and find a solution to it? Because when you talk about job creation being weak, then obviously you expect more people to be out of work. You expect poverty to obviously increase. Incidentally, that would lead to more insecurity and all of that. Do you see the government on the path of intentionally dealing with these challenges that even though we have the macroeconomic success and gains, we still deal with at the micro level?
Well, I will answer it in two ways. I will say yes, there are some steps the government has taken, and really we commend the government. We used to complain of multiplicity of taxation. Now, taxation as an issue before entrepreneurs by January 1 will become a thing of the past. We used to have policy somersault. We were having a bit of gray area in terms of accessing foreign exchange. These are things of the past. So glory be to God, those are some of the steps the government is taking, and we do hope that they will continue in that. However, just like the report did highlight, there is need for government to do even more. Number one, we still complain about inadequacy of infrastructure in Nigeria, and the cost of implementing infrastructural facility provision is so humongous. When you benchmark, say, a 1 kilometer road in Nigeria, the cost of doing it would say the same 1 kilometer road, say, in Kenya or nearby Ghana or even Benin Republic, you realize that the price we pay for 1 kilometer road is 10, 20 times higher than what, say, a Benin Republic government would have paid or a Ghanaian government would have paid. So there is need to do that. And unless otherwise, President Bola Ahmed Tinubu wakes up and ran on some of these things, honestly, we may never see an El Dorado in the near future.
That speaks to leakages again.
Yeah.
Because they are being carried out by the government.
Naturally. Yeah.
All right. Thank you so much for your time. Mr. Shoaib Idris, the Managing Director and Chief Executive Officer of Timeline Consult Limited. We appreciate your time and your
Thank you for having me.
All right. Let's get to the global space and see what's happening for today. All right, to what's happening in the global space. First of all, expectations for this week. This week, we're going to hear a lot of IMF and World Bank. That meeting, the annual meeting, starts today in Washington, D.C. And so world leaders are meeting there. And Nigeria's team is led by the CBN governor, Mr. Olayemi Cardoso. So, of course, we'll be hearing a whole lot from there. Also for today, from Germany, we're expecting the Germany Wholesale Price Index. That's for Monday. Tomorrow, we expect to hear from Fed Chair Jerome Powell. Is expected to speak. And then from the UK, unemployment rates is expected. And then on Wednesday, China inflation and China Producer Price Index, as well as from France, we're expecting to hear the Consumer Price Index. Those data is what we're expecting on Wednesday. On Thursday, US retail sales, as well as UK GDP is expected. And then on Friday, US industrial production. Those are the major expectation data from this week from the world. And we're also expecting Nigeria inflation numbers this week also. That should be like 15th. So we hope to have that in 2 days, hopefully. They will stick to the calendar here in Nigeria. Other than expectations for the week, the EU entry and exit system that started yesterday, October 12, requires those with UK passport heading for a short stay to register their biometrics details. They told us about this a while ago, but it's actually started yesterday. If you hold a UK passport, you'll be required to do biometrics. And we learned it's just a fingerprint and a photo collected at the point of entry, and it's free of charge. So it's just collection of data. That's what is required. It affects all countries in the Schengen area. They're supposed to participate in that. And then we move to Germany, where wholesale prices increased by 1.2% in September compared with the same month last year. This according to data released by the Federal Statistics Office. The year-on-year rise in wholesale prices provides a snapshot of pricing trends at the distributor level in Europe's largest economy. The Federal Statistics Office data shows that September 2025 wholesale price movement compared to September 2024 levels. That's it from Germany. And then we go to the dollar. The dollar remained under pressure today as investors are hoping that Washington would temper its latest escalation of the trade war with Beijing after Friday's sell-off, while political developments in France and Japan undermine the euro and the yen. So the dollar is down. The dollar index, which measures the greenback's strength against the dollar, a basket of 6 currency, was down 0.1%, following a short-lived rebound from declines after U.S. President Donald Trump announced a 100% tariff on China. So that's it with the dollar. And of course, it's affecting a whole lot of things. A lot of commodities reacting to that. Then in China, soybean import hit a record high for the month of September, even as the country avoids U.S. supplies amid a resurgence in the trade tension between those two countries. The world's top buyer brought in 12.9 million tons of soybeans in September. That's the highest ever recorded for the month of September, according to data from customs. And the Chinese crushers have been bolstering supplies of the oil seed with shipments mainly from Brazil, and in the meantime shunning U.S. cargoes as high tariffs and political risks make the trade unviable. And talking about commodities now, gold is the celebrity of the moment. Gold prices jumped to fresh record highs in Asian trade today, approaching 4,100 per ounce as renewed U.S.-China trade tensions boosted demand for safe haven assets. Spot gold rose 2.26% per ounce after touching 4,078 earlier in the season. Silver also hit an all-time high, riding on that momentum, and prices surged after U.S. President Donald Trump reignited trade tensions on Friday by threatening to impose new 100% tariff on China. Still talking about commodities now, cobalt prices have extended gains to a 3-year high as export curbs in world's top producing countries threaten to create a shortage of the battery material and erode confidence in its ability to meet demand. The ban on shipments by Democratic Republic of Congo has roiled supply chains since it was imposed in February, while the quota system that will replace it from Thursday could push the market into deficit as soon as Thursday. That's global news. But before we go, I'll tell you that Nigeria's stock market has recovered this morning in early trade. Closed at 146,000 level last week, but we're now on 147,000 level. It's gone up 0.02% in early trade. Of course, we'll give you details of that during intraday trade, and hopefully by then we'd have had a more comfortable stance in the 147,000 level. That's it on Business Morning. Thank you so much for starting this week with us. I'll be back at 1:30 to give you updates from the world of business. I'm Ini John Mekwa. Talk to you later.